Hi everyone, this is Vivek Srivastav. Welcome to my channel. And today we have with us Raman Sharma, who is a startup investor and is the founder and CEO of Best Vantage Investments, a platform that's dedicated to providing transparency and due diligence to startup investors. Raman is a chartered accountant, a CPA, and has an MBA from IIM Ahmedabad and has had leadership roles and senior finance roles in companies like Dow Chemical, BASF, EY, and Deloitte. Today, he works with founders and investors to help them make informed decisions in early stage investing, emphasizing on credibility, governance, and long term value creation. So, thanks a lot for joining us, Raman. Glad to have you here.
Thanks for inviting me.
So I'm looking forward to this. I think we'll have a very informative podcast. You started off in the world of finance, auditing, and what drew you into that world first in the first place?
When I was a child, I was very intrigued by businesses. Finance was something that very much intrigued me. I remember the situation where after my 10th, many people used to, because I got very good scores in my 10th. So many people told me that you should take science. But I was very inclined. I wanted to take something into commerce business. This something interested me a lot. And that's where, I started my journey. And after that, I started my chartered accountancy. I was a rank holder in CA. Then after I got an opportunity to intern with Deloitte, it was also a very good experience. Worked with lot of top companies who are going through very different journeys, and so this experience was very transformative because you get to work with corporates at that time. And of course, after my CA, then I worked with Ernst& Young. There also I was trying to work with companies. There were some listed companies very interesting in infrastructure and other aspects. So that also was a very interesting part of the journey. After that, I started thinking that I'd already done my internship, and then I worked also in audit. I wanted to understand things from the other side of the table. So what I did is joined Dow Chemicals. I was in the finance department, overall handling the finance and accounts, treasury, other things. We were very actively involved. It was a very close knit group where you were working with different stakeholders and trying to understand what they mean. And it was also a very different experience. Sometimes as an auditor, you look at some things, but when you actually go into creating something and how that things happen, it's a very
Right.
it opened some new vistas for me, new understandings. And the overall effect was, I would like to say that it was like having a bamboo effect. So what I want to say is that if you look at a bamboo plant, for 2 to 3 years the bamboo grows its roots inside the soil, and it keeps on growing. And then but at the same time, you don't see anything above the surface. So people tend to say, what's happening with this plant? It's not growing. But in the next 8 weeks, it can grow up to 60 feet. So that's the how much it can grow, because it has a strong foundation. So if you're talking about finance, you should have a strong foundation. That's what I wanted to build. And then I wanted to maybe explode, because the foundation itself was very strong. Because if you don't know, if you yourself don't have experience, how can you advise other people? So it's important that you should know
Right.
and understand everything, then you can guide other people.
So these are pretty big companies, billion-dollar companies. How was it, the size, the sheer size of the company? How was that as an experience for you?
Yeah, so these were very big companies. These are Fortune 500 companies. They have their own processes. They are very solid in themselves. And working with them, I got to understand that how they look at it, how they look at organizations, how risk has to be mitigated. So these were very important aspects. If you look at Dow Chemicals, also there were many strategic things also happening. Like even if you are at a country level, say Warren Buffett invested into Dow Chemicals, he put $3 billion, and he exited maybe 6 8 years back, but he made $3 billion in profits. So that was a time when at 2008 and Dow Chemicals had made some decisions, and so this was the things, when you work in some company, you understand how these deals happen, how investors, they invest in the right companies, understand which is the right time to invest, and then how they make experienced investors like Warren Buffett, how they make money by investing in such companies. So these things, you understand when you only work with such companies. You work with very good people, leadership. You work even with the global leadership. Many times they visit you, you come to understand that. I myself went many times outside India to understand things. BASF Chemicals also, it was a short stint. Maybe it got a little bit interrupted because that time I got an admission into IIM Ahmedabad. But that was also an interesting thing because it was in the Indian entity was a listed entity. So when you have a listed entity, it's like a very different game. Dow Chemicals also was listed, but it was listed in US. So and this was listed in India. So like US requirements are a little different.
But BSF is headquartered in Europe, correct?
Yes, it is a German company, but in India, the Indian entity is in itself listed. So when you have a
Wow.
listed thing, so like all the things like quarterly, it's like a quarterly.
I guess the auditing is much more detailed for.
I was from the account side, so we have to we have to understand the investors, we have to look at the performance, we have to make sense of the numbers, and it's a very rapidly evolving because every quarter is almost like an year end. So and at the year end also there cannot be much differences because you are also working with the regulators. You cannot differ by a big amount. So it's a very challenging thing, and you should have a very clean shop. So that was also a very interesting perspective, and of course then I got admission to IIM Ahmedabad. I wanted to do MBA for a long time. It came little late, maybe 12 years, but I thought that I might as well take the opportunity because if I don't do it now, it will never be done because then I'll be
Right,
just sucked into this day-to-day life and priorities. So I was very fortunate, very lucky that I took this decision. And then after that, I worked in two companies. One was Indian company where I was CFO of the entity. It was having operations in 50 countries. Then I also moved into one Fortune 500 company where I was a CFO. So for me also that was another aspect where now I moved to a senior leadership role and then working with the CEOs, trying to make sense, getting the right information, taking decisions. So those things was also like a very much interesting phase for me. So at almost 33, I was the CFO of the companies. Out of my, actually in my college brochure also they told that one guy, he got he came out as a CFO.
Wonderful.
Yeah. So, but of course, these things experience are very rewarding, and they shaped how I looked at things in future.
I have an interesting question. To what detail does a CFO report to the CEO? So because the CEO may or may not be from a finance background. So how much detail would a CEO require from a CFO? Just a kind of a summary, or maybe very, very detailed, or I guess it depends from CEO to CEO.
It depends. Sometimes I've seen on the overall organization. I have seen that good CEOs, they keep CFOs by their side because I think not only an organization but an individual also, you have to take financial decisions, right? And if you're taking financial decisions, you need you cannot outsource it. This is not like I'm giving my accounts to someone so that they can do the auditing and all. It's not like that. You have to look at a more strategic level from a decision standpoint. Like for example, we had a situation in which COVID had happened at that time, and the revenue suddenly was zero.
Yeah.
So there was a pressure from the man that how can we now look at our costs, what are the things that we can do, what are the vendors, which are the vendors with whom we can negotiate, which expenses we can curtail, what to bring down. So these are the times when CEO and CFO, they work very closely at a time of restructuring all this. So but even otherwise I think my request to all CEOs is there to involve the CFOs at the time of important decision making. Small decision making, they make huge impact eventually. Like in one of the companies, even now I this thing I cannot keep inside me, and I work with many companies. So there was a question of lease versus manufacturing. So there was this state of art facility which we could have bought easily for 10-15 crores. But the thing was that did we have at that time this much capital, and was it needed?
Right.
So
And then not only that, you got to kind of maintain it too.
maintain it, yeah, right. So the at the same time, we when we are looking in the market, there was a Swiss made facility, is all Swiss machinery, and it was available at almost pennies, because there was a guy who wanted his his child to take over the factory, but he was settled in US and he did not want to come back, so he wanted to give it to a very worthy person who could take ahead his dream. So like, then why do I spend 10 crores on it if I can get it leased for around say $20,000? Okay, it's a
Right.
no-brainer, right?
Right.
So these are some of the decisions. Like, if suppose, for example, that guy had gone for getting the state of art manufacturing facility, he would spend so much money, and then he will not have money for the growth capital. So these are some of the decisions, very critical ones, where you have to put the CFO hat and you have to guide the CEO. Many times, CEO do not have a finance background. Even in like, we look at companies, many of the core team may not have a CFO with them.
Right.
So at the time, it's very important for you to take the help of someone who can help you guide through these decisions. These are very make or break kind of decisions. So I would say, have a person who can
Right.
navigate you and take his view, like, because some of people feel that even just doing marketing or just doing sales, that is the other thing, but you also have to look at finances.
Right.
Because eventually you have to manage it with the cash. Most of the businesses have not gone down because of that they did not do business, but because they ran out of cash. So cash management is very important for businesses.
Wonderful, wonderful. That's good advice. So after that, you got into investing, startup investing. So how did that transition happen? What prompted you to want to leave all of that and start your investment company?
So it was, I think, for me, a very natural transition. So at that time, I was trying to do not exactly at Best Vantage, but trying to develop something else. But I was working closely with many startup founders, and many of them came to me telling me that you have so much experience in finance, so can you please guide us on that? So it, like, I felt that I could give back so much to that, because, like, as I mentioned, most of these companies, they don't have their own in-house CFO, they don't have a finance team, there's no one to guide them. So I felt that this was very comes as a natural progression to me. Of course, I knew many investors from my earlier background, so I thought that I could use this and build them as a bridge. And of course, this has been a journey where we have learned from everyone. We have learned from all the stakeholders. The pillar, like, Best Vantage is like a platform. So there are two aspects: there are investors and there are founders, and from both of them we have learned a lot. So, and it has been and we have evolved out of that. So we do not have a something that we just copy pasted. It is something that we have evolved after listening to feedback.
Wonderful, wonderful. So when you started Best Vantage, what was missing in the market that Best Vantage kind of filled?
So at that time, for investors, democratization of opportunities was not there. So what was happening is that deals were not coming to them in a very structured way, or they were not coming to them at all. Other thing was that it was more of hype rather than information, and it's based on very subjective way of investing. That nobody guiding them or filtering the projects. Somebody is sending them on WhatsApp and just they are doing it. There was no verification, due diligence done of startups. Nobody knows what's happening. And from a company perspective also, we found that many companies were there, like, they were not getting access to good investors. So, like, we have seen that so my vision was that if there is a good product, there's a good founder, he should have access to finance. So I feel like finance is like a essential commodity which everybody should have access to, because you cannot live without that. But no, there are some inherent biases in our society. Like, somebody speaks Hindi, that means, oh, he must not be that educated, he cannot be do a good business. So I wanted to make finance accessible to all, in the sense that if a person is doing good business, so then that person should have access to finance. He should not be restricted. Like, there are good businesses built by tier 2, tier 3 cities also. So like we had an example in Shark Tank also, which had happened. There was one of a portfolio company had gone there, and the guy was competing with one of the judges. So the judge clearly told her, don't invest because he's my competitor. So this is what is happening, and we got the person funded, and I think in a quarter or so he's going to make his SME IPO. So, like, they had very solid numbers. They had a unique sense of marketing. I'm talking about Record Cosmetics. I hope that the things happen out in this way, and we are able to give exit to investors. And I think the founders have done a great job in working in that. But of course, because just because the founder would talk in Hindi, or like,
Right.
there's a bias
I
towards
think
him.
anyway in Shark Tank they actually encourage you to speak in Hindi. I actually applied and I didn't get through because of some clerical error or whatever. Their website is terrible, by the way. And but then I think what I was told by my co-founder was कि I'll have to present and do everything mostly in Hindi rather than English.
So it's a mix. I think it's I would say that these shows are entertainment channel.
Yes.
So I think more than Hindi or English, it's like how much entertainment you bring.
Yes.
So
Yeah.
is it compelling that somebody will switch on the TV and see you?
And the deals also they make are not correct, in my opinion anyway.
I think it depends. See, there are many things that happen on the tank, and we have access to around 50 companies that we have worked on. So, there are some deals in which the founders also are at fault, and sometimes sharks also overpromise and underdeliver.
Right.
But somewhere the truth lies in between somewhere. I would not say anybody guilty, because I've seen, like I may say that there was a pitch in which founder told a certain revenue number that he'll achieve by the next year, and it did not happen. So the entire calculation of valuation and all was based on that. So imagine if that is going to happen, the shark
Right.
is eventually going to say that either he'll take more time or he'll back out of the deal, right?
Right.
So, but there have also been things where they have told that we'll invest this much, and maybe a lesser amount came or did not come at all. So the
Right.
truth lies somewhere in between. But at Best Vantage also, what then we did is that we have around 200 companies working with us.
Wow.
They are bigger companies. Some of them are startups, growth stage. We have around 75,000 investors. They are from India, US, UK, UAE. So we have good investors from there, and we now have around 40 follow-ons and exits, and there are 5 exits that are there that has happened till now, and I think one more shortly happening. So we are very happy with the kind of returns. There are some companies that have given 16x returns on the investment of companies. So we have tried our best, and some of the rewards is happening, because this is a longish kind of a cycle.
Right.
Because you put money, you cannot expect it like next day you start getting interest in bank account. But yeah, it can be insanely rewarding. You look at the equity markets, like last 1-2 years, it has delivered negative returns.
Yes.
Everybody says that okay, buy the dip, but people don't think that can I invest in a startup? Like, I have an investor who maybe put a crore of rupees. In 3 years, he's sitting at 25 crores, and this is insane amount of money. Now, which asset class will help you build that? Of course, there are 1 or 2 companies that they have not failed, but they haven't grown like that. But
Right.
still, they are going into
Right.
the next round. But I would say, see what happens is that company itself made so much money that he's covered. Like he put maybe
Yeah.
2-3 crores. But the single company has made for him 25 crores, so he's like almost now covered. So when I meet him, he's very happy. So this is what we want to do, and within 3 years, like within 3 years, some 1 crore become 25 crore. It's like a miracle.
Right.
Right.
What does Best Vantage do? Does it provide the due diligence services? So like if there's a founder in a startup, so you'll do the due diligence on the startup and the startup founder and inform the potential investor about that.
Let me go to the background of it. So what happened is that, as I mentioned, we learned everything on the job. Earlier, we used to get deals, we used to talk to the founders. That always remained in Best Vantage. and we used to keep the due diligence as a work in progress till, and we used to parallelly initiate investor conversations. But there was a case like, one of the founders that was there, he had a police case registered against him, and he was a sole founder, and there was something, where which could even lead to a arrest warrant or something, and that would leave investors in a very big mess. And this is a deal which I had picked up from like one of the other leading platforms. So the thing was that what was happening is that the nobody was doing a due diligence of these companies. They were just coming through. Nobody has checked anything. Everybody thinks that the guy sent before has checked it, but that's not the case, right? So there's somebody has to check. He has to say, okay, this is things. These are 10 things that I checked, and these 10 things are working out, and there has to be a report for that. So what we decided, we took a extreme step. We told that we are going to check everything. If they meet our quality checks, then we'll onboard them. If they don't meet, we'll not onboard them. So then, and we'll do it irrespective of whether any investment happens or not, because that was another thing that was happening. Because if the investment started, there were say commitments for the round, then it went into, you have a bias towards that, because then you want the due diligence to be successful. So we told that, okay, let the investment not happen. We are taking a risk. Best Vantage is taking a risk, and we want to safeguard all our investors, and we want to do a due diligence ourselves, which is a financial due diligence, legal due diligence, technical due diligence. We'll do all of that, and basis that we will have a report, and it's always there for our investors. Anybody wants, you can have a look at that report. It's free of cost. We are not we have never charged the investors anything, but we want to give them quality, and we want to, like, if I go and sleep at night, I have to say that I took whatever care I would have in evaluating a company, and then I gave a deal. And then after that, of course, it's supposed to have business ramifications. It's all a business thing. Sometimes some companies click, some don't. But we have seen that this approach for us has worked. Our most of the companies are currently, none of them in fact has gone bankrupt. All the companies are functioning. Many have raised follow-on rounds. 5 exits have come. 35 follow-on rounds have happened. So that is something that we must be doing right. And I think it is because of that only, this formula that we have somehow put together, that we are able to. The thing is that, what I feel is that if I take money from someone, maybe I don't take it, but if I advise someone to invest in a company, I think it is like my money, So
Right.
we take all the due diligence, all the care that reasonable I would take, if I were to put my money. So if I have that kind of a confidence, then maybe, I feel that, I have done justice to the investors, because I've taken care. Because I want to sleep soundly at night, and if I see that all these things happen like that, then maybe I've done justice to the investors who has put their hard-earned money.
So, what makes a startup stand out for you? And what are some red flags also that a startup shows that you will want to avoid it?
Okay. I think the most important thing in a startup or a company that we are evaluating is on the core management team, especially the founding team or the CEOs. Or so these are very important for us. We have many times placed bet on people who maybe in an average business, but the people themselves were very good. So I'll take example of Desi Farm. So he was the CEO of Crompton Greaves. That's a listed company.
Right.
Mr. Sunil Shai. He was doing something in dairy, which was okay kind of an industry at that time. Country Light was there. We did not have a regional player. So they were doing like trying to provide quality to people, but I would not say it's like a AI or something. But the founder was very good.
Right.
There were times where we were even struggling to get investments. But now there has been situation where Rohit Sharma has invested, Jasprit Bumrah has invested in the company. They made couple of acquisitions. They have grown big. Very soon they will be absorbed by a listed company, and they are also poised to give around a 6x returns to an investor in 3 years, which is around a 88% IRR. So yeah, this happens, but it's only because I took a bet on Sunil, and that discussion honestly people will, I don't know, they may judge me, but that discussion did not last more than 20 minutes because I was so convinced with Sunil. Like, I told, yeah, no, this is the guy. He will turn it around because he's a CEO of Crompton Gibbs. It's a 4-5 thousand crore listed company. That guy, if he comes on any company, he knows how to, he knows the
Right.
processes, he know how to scale up organization, he knows how to take it around. So these people are bound to succeed. But I have also seen sometimes, was in this euphoria, some founders get a little bit confused, and sometimes they go into a very kind of tangential ideas, or where the scope of the business is not that much. So I would that time, maybe we tell them that, okay, like I not like to name names, but we have a couple of bankers, and they are making a platform for waste management. Nothing wrong in that, please note. But maybe I would feel that, if they are bankers, they would be better, uh,
Right.
better sticking with the
the
core and
financial
developing
stuff.
there, right? I
Yeah.
mean, they did a very good job. It's not that, because of course, that's expected for them. But we would try
Right.
to do something out of your competency.
Yeah.
Maybe you would do it well, but you could have done better.
Right, right.
That's
It's always very tricky if you're out of your competency, and sometimes even if you're in your competency,
Yeah,
it's tough.
it's also tough, but yeah.
One thing I'll say, I had prior to my startup.
Mm-hmm.
I hope you're enjoying the podcast. Before we continue, I want to take a quick moment to tell you about something I'm really excited about: my startup app, Finity. Are you tired of scrolling endlessly and still feeling disconnected? That's why I created Finity. It's not just another social app, it's your connection engine. With Finity, you can instantly discover events, hangouts, and people around you who actually share your vibe. Post about what you love. Be seen by people who get it and turn online into offline. Finity isn't just social, it's real, it's local, it's you. Download Finity today and live your vibe. I had 30 years experience, mostly in the US in corporate roles, Fortune 500 companies, whatnot. And the mistake I made, or I didn't know at the time, but I realize now, was I thought that 30 years experience would translate to the startup world, which it does not
Which
at
does
all.
not, yeah.
At all. So I made a lot of mistakes just because, I had that experience, but not this experience. So a lot of mistakes happened and things went wrong and whatnot. But, that's the thing about the startup world, is it's so on the spot kind of decision making stuff that isn't, first time in the world is seeing something like that. So then you don't have a precedent to follow. Right, so you kind of have to make the right decision without any sort of a historical research that you can do, and so that kind of makes it very, very challenging, I think.
Yeah, so it's like, a person who has to be an all-rounder. Like, you have to bat, you have to make say 50 runs in 10 balls, and you also have to take 5 wickets, and you have to take 3 catches. So it's like you should know everything. Everything will come. The content writer will come, what do I write? Digital marketing will come to you, what do I do? IT person will come to you, how do I develop the app? The product sales guy will come to you. They all look up to you. So
Yes.
eventually, and you may not have experience in all these fields.
Yes.
But then the buck stops at you, right?
Yes.
So everybody will in fact look at, so how do we do this? So that is what, sometimes it can be also highly enriching also, because you get exposed to a lot of areas.
Yes.
You start connecting the dots, that how these areas are connecting.
So what are some mistakes you've seen startups and founders do? Some red flags?
So red flags, what we have seen is that when founders are not having skin in the game, we have seen, say a founder is working somewhere and he's also developing a startup. So I feel it's unfair. Like, you could do it, it's not wrong, but you cannot take investors' money, because investors are putting their hard-earned money. Then you cannot say that, I'm not full-time in this. And then, if you're not put in the water, you'll never learn swimming. So if you have a comfort zone of a good salary that is coming, maybe I don't think you're never going to give it 100% towards taking this idea germinate, because that is something that's going to take a lot of effort for the results to come out. We have also seen that people, there are some founders, say he's based, say outside India, full time maybe, and he says that after I pick up the fund, I'll come back to India. That never happens. So No, it's okay that we may have to keep traveling. I also live in UAE in India, and I keep shuttling between the two. But at the same time, we have seen in all the cases that these founders eventually never return back to India, and then see eventually your team is here. It's like a
Yes.
it's like a machine without a head. They will do their normal jobs, but if you are not there to
Right,
push
right.
them, or maybe
Absolutely.
to guide them, I would say, not push
Yes.
them, guide them, but and
Or motivate them.
motivate them,
That's the word.
talking to stakeholders, talking
Right.
to new customers for expansion. You are the face. If you are not there, then
Right, right.
how do you think this become
Right, right.
unicorn? You'll say, oh,
That's definitely what I ran into. I have to be the driving force behind
of
it,
course,
and otherwise it won't get done, or it'll get done in a very mediocre manner.
mediocre way. Because
Yeah.
also what happens is, startups cannot have the luxury of taking 3 4 very senior pros, because they cannot pay the so much salaries.
Yes.
So at that time, then at least the 2 3 core team, they have to be there,
Right.
and trying to work out, develop the sales, develop the production, everything.
Right, right.
Yeah.
Now, tell me, you had mentioned, this startup founder, CEO of Crompton Graves, and all that. But not all of us can be CEOs of big companies. Uh, what else do you look at in a founder that would impress you besides being a CEO? A very high role at previous role.
So I look at what is the background of the person. Say it's not that everybody need not be from like as I mentioned, top organizations or top MBA colleges, but at least they should know what they are doing, and some kind of experience in that. You could also have worked in that domain. That is also as good as, I would say, as good as an
Right.
MBA or something, because you worked 2 3 years, you know the field, and now you say, okay, there is a problem that I feel and I want to solve the problem. So that is something which we want to stress on. We have always had the philosophy where we wanted to see certain kind of traction coming in the business. Earlier, in 2021 or so, there was a phenomenon that funding was made based on pitch decks and all. There's something that no investor would want to have. People want to have some kind of traction.
Right.
Traction could not does not only mean that revenue traction. It could be increase in the number of customers, say month on month growth in some of your metrics, revenues. Yeah, so
Popularity, even like.
popularity,
Like,
users, coming to know about you. And sometimes some founders themselves are so well known that maybe they also can take the startup to the other level. There are also certain other founders who have given past exits. These founders are also very heavily
Right.
valued in the startup world, because they have
Right,
given
right.
exits. They know how it has to be done. They have gone through the entire cycle and emerged
Right, right.
one time victorious. So if the probability of them again doing it is very high.
Right,
So
right.
these are also the guys. We also look at the team, how well balanced is the team. Say, I had one company in which there are two chartered accountants who are doing it, and no offense against chartered accountants. I myself a chartered accountant, but like the thing was that there was nobody in the marketing side who was running the product. If I look at the last 3 4 years sales, it was very flattish. Maybe they were not doing so much of loss, but then there was no growth. So I was talking to them, like, who is doing your marketing? Why the numbers are not stacking up? And maybe they did not have anybody in the marketing side who could maybe guide them, or maybe expand the product, expand the sales, go into new markets. So this is it's very important to have a very balanced team, especially if you have an IT product. Say you should have a in-house CTO. So these are some of the things that are very important when we look at it. Not only that, I would not say just the CEO, but like in tech products, especially CTO. In other domains, somebody who's very strong. I mean, it may not be the founder, but like somebody taking part of the growth, or some of the founder actively involved, because some person in the core management team has to be a person who drives sales. Sales is very important. Sales is the engine that is running your train of entire startup. It is carrying all your expenses. If the
Right.
engine is not working, like if you're even building a fantastic product, but there's no one to sell it, it's a problem. We have
Absolutely.
encountered one of the companies in which they're developing a fintech product. we think the product is very good in terms of what output it can produce. But I feel that, whenever I talk to him, he says that, no, we have developed this, we have developed that. I told, what's the use? Where is the sales for that?
Right.
See, eventually now in
It has
this,
to sell.
you have to sell, right? You have taken investor money. If there is no growth, it creates a big pressure on everyone. Like, we have already investors who invested into that. We think that, he has to grow to a next level. If the sales, like, if you come after 1 years after having spent 15-20 crores and tell me that no, we developed another product but the sales is flat, it's very difficult then, to see. And investors could be little unforgiving also, but then that's how the world is. You will
Right.
not get many chances. And
When you say unforgiving, what do you mean? Because there's not much they can do once they've put their money in, right? They can't take it back. So what do you mean unforgiving?
unforgiving in the sense, like, maybe they will give you they will give you a check once, maybe even twice, but if still it's
Right.
not improving, that they are not going to put, because it's a sinking ship, then they know this guy can't do anything.
Right, right.
So there's no point, just topping up, and out of, it's like an emotional decision. It's like when a stock starts falling, you start buying more of it, and then it falls
Keeps
even more.
falling, yeah.
So you try to do average, but that average never happens. So it's like that. So and those, now investor patience is thin. But at the same time, we feel that if it's a good product, investors are there to back them. If they see good opportunities there, people are able to put money. People have disposable income with them. Current market, I feel that there are no opportunities for growth. This is a very good time for them to invest in companies where, now if they put in the next, all their valuations are very good. I yesterday was meeting CEO of a very top fund in India, and he told that they are doubling down. In fact, they are saying that we want to invest more. They see the valuations are very good. We are getting good opportunities. Deal flow is very good, and we want to buy the dip. And that's what many investors have done. Seasoned investors.
Are you talking about the stock market? Dip?
No, these are guys
Startup.
are startups. Like,
Okay,
even the
startup.
startups, like, what has happened, the
Right.
valuations have come down. They're quite reasonable.
Okay, got it.
Founders have started listening more to investor
Right, right, right.
feedback, and also this is a good time for investors to actually invest. I feel this could also be a golden age for India. If you
Yes.
see the overall global scenario, India is one of the bright spots.
Yes.
Now, I see many people coming back to India also. People are they want to settle back in India, and with everything, I think Indian economy is resilient. It is self-contained in a way. It's not so much subject to international fluctuations, except oil, which we have
Right,
dependency because we don't have oil. But other than that, I think it's fairly immune to other things. But in that also, what we have done is that we have good set of partners who even take care of whatever we don't have. So I think the next golden period is going to be India, and this is
Absolutely.
going to see lot of companies take shape from India, and India is going to be at the next level.
How about a early stage startup, which is kind of what I am, and we talked a little bit about that. So, what hope does a early stage startup and an investor have? I mean, startup founder have in getting some investment? They may not need a lot of money; could even be as little as half a crore. Or so how would they go about that? Because they may not have all those numbers to justify a big amount, but they do need some assistance.
Of course.
So what can a early stage do?
Yeah, so I think the same logic applies, like especially when we look at tech products, even AI for that matter. It's very difficult in the first 2-3 years to have revenue. So every time we do not stress that even that revenue has to be there. That time maybe we look at the team, what potential they could have, who are the team members, can they scale this company to the other level, and if they can do that, maybe we have many deep tech companies also working with us. We invested in a company called Omspace, so they are in the space tech. They I think, other than some revenue here and there, they don't have any revenue, and we have already deployed $3 million on them.
Nice.
So it's on the vision. In these companies, sometimes it also becomes milestone based. Like in this company, we have clearly defined the milestones. Like, so Homespace did a sounding rocket test. that has been done. Now they are doing engine development. So we are on track, like and when we have investor meetings, these things are scrutinized and discussed, and we have a very positive
Right.
meeting on that. But yeah, there could be a thing where they don't even have revenue, but there is finance. But uh, that time either we look at the company or we look at achievement of milestones, so that
Right.
we are moving towards the
Right.
goal. Otherwise, just
Right.
spending and being nowhere, that does not make any sense.
Absolutely. Another interesting question about early stage, which is also what I'm facing. I'm, uh, showing my product as well as the company to potential investors, and to that end, of course, I have a pitch deck, but I also have some financials. The thing, though, with me, and I'm sure with a lot of early stage startups, is you make a lot of assumptions because I mean, what else can you do, right? Because you don't have the sort of data to
It's
extrapolate
a
on.
very unpredictable situation. You don't know what variables may be, so you make an estimate.
Right. So, for like example, I'm estimating 1,000 users per month growth in first year, 2,000 users per month growth in second year, 3,000 in third year, and so on and so forth. Then 2% of the users will take on the paid services, for example. Now, these are assumptions. I don't know. It may be 2%, it may be 5%, maybe 1%. I don't know. What does the investor, the potential investor, do in a situation like this? So I'll make the Excel sheet. I'll show this is the projected financials. What would the investor do in a situation like that?
So I would say that see. Eventually we are making an estimate, so it cannot be accurate. So I would not say that it has to be 100% accurate, but the estimate has to be made using some kind of assumptions. Okay.
Right.
Say for example, you mentioned that maybe I monetize 2%, right? That's what you said, right?
Like 2% of the users.
2% of the users get monetized. So for example, if this is a maybe key assumption that you've used. So for example, you say I have these many users, they grow this much, and I monetize 2% of them. Is this 2% getting derived from some kind of a number? Like for example, say yours is say e-commerce kind of a platform, and maybe you look at the history of Facebook and all, yours,
Right.
or maybe Instagram.
Like a historical.
You see, okay, you can put a table there.
No, but the thing is, they are not exactly the same thing.
They're not same, I know, but see, that's what with assumptions. That's what I mentioned. It need not be accurate, but if somebody questions that judgment, you should have some underlying logic towards it.
Got it.
So you cannot say that no, I feel 2%. Then he said not, why not 1%? So then that becomes a thing where investors and founders, they start disputing. So you can say that see, this is a thing that is not come before, but whatever best estimate I had in terms of social platforms, I got some data of the last 5 years, and they have monetized say 2% of their users. So this 2% number is coming from, and this is the best estimate I have. You can tell them that if you think there's any other thing that
Sure.
I could use this to better my assumption, you let me know that. But otherwise, this is the best estimate I
Right.
had. So let them say, no, you don't take from Instagram, take from Facebook. Okay, take from Facebook. But at least there is something. But if you say no, 2%, and you don't know where this 2% comes,
Right.
then this always going to be a.
Right.
See, because in a early stage, that's what happens. And in fact, this was also one of the red flags that I did not mention earlier. Like on the financial projections, I think financial projections, you have to be very sure, because not only just for the investors, these projections are very important for you also, because
Yes.
all your cash management,
Yes.
everything is going to be based on these projections.
Absolutely.
So if this does not happen, then for example, the 2% becomes 1% conversion rate, then what is going to happen is you are going to run out of funds very early. So then your fund ask will increase a lot. You
Right,
need
right.
to maybe start going outside to the market for investment maybe early. So many of these
Right.
are tied to each other, and this will help you plan. So these projections, I would say, are not for the investors. They are actually, I would say, more for you. It's your projection. So you should be, because eventually, even if you have the check, you have to go back go back to drawing room and come back with those results. So eventually the buck will stop at you, and you have to show the result. Okay, you told 2%. Where is the 2%?
Right.
So and then we can see. So these are the things. Yeah.
Is this the sort of thing founders and probably investors as well underestimate, or they have you seen that happen frequently where they overestimate? It's 2%. They say 2%, but actually it's 1% or less.
Yeah, we have seen, like for example, there is also another, maybe I'll flip the conversation. So maybe there is a, in many pitch decks, there is a slide of TAM SAM SOM, okay,
Yeah.
which is like how much is the market, how much is the base,
Right,
because
right.
eventually all your estimates are based. People say, if I, this is a, like 5 billion users I have, even if I make 1% of that, then I'll make this much, okay. Now, but are those actually the users? Like for example, in
Yes.
India, we may have around 150 crores, right?
Yes.
But example, the people using e-commerce are only 20 to 25 crores, maybe.
Right.
I think 15,
Right.
20 crores is a number. Maybe
Right.
let's take 20 crores,
Right.
roundabout. So you cannot say India is like 150 crore or something. Those
They
are
aren't-
not your users. If you're e-commerce, maybe if you're e-commerce platform, you would say that, maybe overall market is say 20 crores. People who use, example, I'm in cold press oils. Only 2 crore people consume cold press oils, and my market maybe out of that is maybe only 30 lakh people, and I will have a say 10-15% of the market share of this entire 2 crore market, and this is something that translates
right.
to this much revenue that I can make in 3 to 5 years. So like this, you have to be very reasonable. Here also, lot of people and investors, they start having lot of discussion
Right.
on this. So these numbers are very important, because eventually all your projections are going to be based on how many
Got it.
customers you have, how many customers are going to be end up paying customers. So all these are like numbers that will eventually come back and haunt you. So better we have a fair
Right.
basis of judging those numbers.
You're doing something called Merger Bay,
Hmm.
right? What could you tell us something more about that?
So what we felt is that we were investing in companies, and so there were two aspects to it. One is that we wanted to provide the companies an avenue for growth, and at the same time, there were some companies who had come to a certain level. We wanted to find them home also, like give exit to the investors, and even maybe give them some kind of stability where they have to not go through this frequent round of funding. Other way, we also found many companies say they were big enough for a SME IPO, but they were still not eligible for a main board IPO. So those companies, typically we wanted to see what we could do better. So what we have done is, like in this merger bay, what we've done is we have working with couple of listed companies, some bigger companies, some unicorns. Now what they are doing is that they have told us that say they want to merge a certain company, and there are different outcomes that can happen. One is that so what happened is that we have a company called Refit, and what happened is that is it's an electronics company. So listed company, Make Electronics, they have signed an MOU with them. They want to become 51 pick up 51% in Refit. They are there are a lot of synergies. They are electronics in the same kind of field. This opens up a new market for MIG, and also for Refit, it gives them access to a lot of new markets, international markets. They have get access to goods supply chain, manufacturing facility, access to customers down south, because Refit is more towards north. So this is also something is very interesting angle. So this is a win-win kind of a thing for both of them, and of course, it will end up with some finance also getting kept in the company, and the company also grows to a certain level. So this was one transaction that's happening. Another transaction that we happened is we had a company called Tiara Agrotech, and they were in search of someone who could infuse young blood and maybe take it to the next level. I would like to say it like that. And they found another one founder, and this founders, all founders, since they've done so much, they've gone to the rut of it. They are become extremely focused, and they know how to run the shop. So they got one of that. rather than a professional manager and become very board driven. They wanted to get fresh blood and inject fresh blood and maybe um, see how this entire organization trajectory can be changed. So this was one reverse merger that's happening, and through this already around 16x multiples of investment is getting generated. In 3 years investors are getting exit, and so this is something that is also happening. And this is another format that is happening. We had SME IPOs also. We have good connections through which we can do SME IPOs also. We also have listed companies trying to diversify their portfolio, trying to go into newer markets. That is also something that is happening. So this is a very good platform, and I would say that this gives us best vantage end-to-end capability. So we are a seed to IPO, I would say. So where we I will take example of Mitra. So we started zero revenue, and today it has been it has merged with the this transaction is ongoing, but it's subject to regulatory clearance. But it's merged with a listed company. So it gives us a bandwidth, and many very few investment companies have that kind of a bandwidth where they can start from zero and take you to the IPO. So we wanted to develop that end-to-end capability, and that also helps our investors because we now have a overall control of the entire process. So it's not that I invest your money and then I hope something happens. That's what happening with majority of the iBanks. Somebody will come, he will invest. But why somebody? Why are you not taking charge of things? You're just leaving it for somebody else to happen, just waiting for things to happen, just hoping. So we did not want to do that. We wanted to control the entire process. We say that if there's a good company, we can take it forward. And also sometimes we have companies like we are running a deal in diagnostic centers. If we have good diagnostic centers, maybe it's not something as a startup we have cultivated, but if there are different deals also, we have listed partners who are willing to invest into that. So this was the vision of Merger Bay. We also were looking at international targets also, so that also remains. If there is good company, we are very happy to look at that. And eventually see, everybody wants good fresh leaders, want to bring fresh blood, they want to have some risk takers. See, because every company, like if you look at say Kodak or something like that, is going to always get disrupted, like VIP and all, it's got almost disrupted by this new incumbent luggage players, right? So rather than a company disrupting you, why don't you take it as a division in your company and feed it, and maybe one day it will eat you himself, but then you will metamorphose into something else, right? So change is only constant, and I think this is how companies look at it. There are many companies, sometimes they don't have these capabilities. Like for example, we had one company, they were into retail, right? So they did not have digital online, or they were not selling anything through these channels. So they wanted that capability. So they got a player, and so they were very traditional. They were retail outlets. They had very solid supply chain, manufacturing, everything was there, but they were not into this new age markets. So that was something for them also a learning. Like they could invest and reinvent the entire wheel. But a more organic way is to take them together and then take it forward. So this is how maybe. We can do everything on our own, but it will take a lot of time, and we have limited time span. So we feel that better that two companies, they come together and work together, right? Great. What's wrong in that?
No, wonderful. Yeah, that makes total sense. But I guess the question is, will the bigger company want to take the smaller company only when they see the potential in it, I suppose?
Of course, so there are many things that happens why a bigger company would take a smaller company. It could be technology. So suppose you are on an old technology stack, and the new company comes with a very rapid, it's on the newest stack, AI, something. And because of that, they feel that this will add a lot of value to them. Or of course, they feel that we are also getting disrupted because new incumbents are coming in. So why not they start cultivating that kind of a division in them?
Right.
The other thing is that they also sometimes feel is that they have a channel, they have a pipeline. Say suppose there's a company that is say into maybe household essentials. They do sometimes, say maybe they do flour. Okay, so with that they can add maida, they can add pulses, but that's something that they have not been doing. But they get a company which is doing that, and then they, through their existing channel, you have a channel through which you can push. The sometimes other thing that happens is that they want to get end to end control of the supply chain. Like in Mitra, what happened, the vision was getting seed uh, the final product. So in a farming equivalence, you are controlling the seed, you are growing the seeds, and then you are making products out of it, and you're selling to final consumer. So it becomes, you control the entire value chain, and then whatever margins are there, those margins become yours.
Right.
It could also mean that, it could also mean some kind of international expansion, diversification. That is also very important. So these are the things that are there, because diversification is also very important. Like say suppose international diversification, like we have companies like say currently there's unfortunate war that is happening, or like war like scenario. So if you have businesses in two countries, you get a good diversification out of that. You put all your eggs in one basket, and then
Right.
then becomes very difficult. If something happens, then you are nowhere.
Yes.
So yeah.
So, what do you feel about startups when they're pitching their optics versus the actual substance of what they're doing?
It has been very relative. If you see in 2011, 2012, there were startups that got funded based on the pitch deck itself. Nothing wrong or right in that. But honestly, that was a phase which I also could not assume. Like it was like grow, valuation is 10x. If you say why is 10x, people will just drop out of the call. And there was no emphasis on profitability also. People used to say, oh, 10x, just grow revenue, growth at all cost. And as a chartered accountant, I could never make any sense of it, because it was not making any financial sense. Like grow at all cost, like okay, everything is negative, then is it actually a business that you're doing? What are you trying to do? So there have been those times also, and of course in these times there is a lot of scrutiny. I would say there has to be a balance. We cannot say that like maybe some optics has to be there, but at the same time the numbers also have to speak. I know all the numbers will not add up because it's a very company, but it should show some kind of a promise that the traction is there, those numbers are there, the LTV is there, your customer growth is there, your profitability is there, everything is happening. And yeah, and like it should make compelling. Investors feel like I want to invest, like that. So and I know it is challenging, but
Right.
yeah, but it has to.
It's like a balance, right?
It's a
Because
balance, yeah.
you can't have zero optics either
Yeah.
on the same side.
Zero
Substance
optics.
is, of course, very important.
Substance is important. This is like people are looking at numbers, but the vision also people look at, that what is your vision, where you want to be, how big is the market.
Is there an example of perfect balance of optics and substance that you've seen in the past that you can maybe describe to us?
See, maybe I would take it in a different way. I would say that the founders who have been successful, I would say that they were good at presenting, but at the same time they also knew their numbers.
Okay.
Like they knew what they were talking. They could put you in your shoes, and they could assess. Like for example, and this comes from experience. We have a founder, Abhishek Kaushik, who is from Mitra, and when he talks, and he has been clear from day one. People have been asking him about exit, and he was very clear that I'll do it a merger, because so many mergers have happened in this space. Of course, there's nothing that he knew, but maybe he was seeing the industry trend, that what was happening. There were a lot of mergers that were happening. Coincidentally, he also got merged into some other entity, but he at least knew, okay, that
Right.
this could be an option. Like investors want to have that. People to have clarity. Similarly, we have Feline also. It's a Alcobev startup. When we talk to the founder, he knows the topic, he knows the industry. It's not that I don't know, मैं पूछ के आता हूँ. That will not work. You have to be an expert in your field. If you are talking in that field, people should listen up to you.
Right.
So of course it has to be that you need to have optics, you need to show everything, but you should also know your numbers, you should also know your business, you should know your competition. The people ask, like yesterday I was sitting in an investor meeting, and they were asking me that how much numbers do your competition do, what is the valuation, what is the profitability they are having. These are some confidential numbers, but people who are in the industry, they know because they benchmark them,
Right.
right, against those numbers, where they are struggling, why you will not struggle, right. So these are the, when investors are taking decisions, they will
Right. Right.
look into these. Like for example, we were into luggage space, and it's very interesting. Like I've seen people sometimes disregarding B2B businesses. Like, okay, it's a B2B, kya hai B2B, kuch bhi kar. It's not like that. I've seen B2B businesses are very solid. They are good cash cows. Uh, in a way, I've been little circumspect about the digital first businesses, but it's okay. Like there's nothing right or wrong. We have seen many digital first businesses also doing very well, and but at the same time, you need to keep some balance. I would say, kind of have a it's like the BCG matrix, in which you have stars who are the performers for tomorrow, and then you have your cash cows. So you need to balance it. If you don't have the cash cows, you will not have enough money to look at the next stars. So if that
Right.
does not happen, then so you need to keep a balance.
Right.
It's the intelligent part of the financial strategy. It's some businesses, some verticals that will make more profit, and maybe you use some of the profits to develop your upcoming verticals.
Right.
So that way, you keep everything in check and fund your pursuits yourself.
Right.
Yeah.
One thing I've found very challenging has been the Indian startup ecosystem, which I found very disappointing in many ways, both from the investor attitude as well as the government, grant possibilities and whatnot. They say there's all that, but then the by the time you qualify for them, meet all the criteria and all, a lot of times you don't meet the criteria and therefore you can't get it and all of that. So I wanted to ask you about what you feel about the Indian ecosystem, how it can be improved, how do you see it evolving, compare it to other ecosystems like in the Dubai and the US.
I would say Indian ecosystem is at a very nascent stage. I think it would be very unfair to compare it with US. I think US is around 50, 100 years of a legacy in that. Indian startup ecosystem is not even 10 years into that. And that is why everybody is very new in this. So the companies that are coming, that are very new, and the investors also are very new. And they are learning on a day-to-day basis. Some have been very successful, like in InfoEdge, if you see, they have made tremendous investments in Zomato and all those companies have become unicorns, and they have given them many-fold returns, and it's become best investment that they've done. But at the same time, some investments have not happened that well. So there are some experiences. There have been some cases also where some founders also were not very ethical. There's some frauds have happened in the system. But I think it's when you are in a evolving stage, everything will happen, and everybody learns from this experience. And after a certain point, you then become a developed as a nation towards startup investment. That will take some time, but we have people who are they are investors who are banking on that. There are companies who are now looking into all this space. It will take some time. UAE, I think, is even it's at an even more nascent stage. Government is taking a lot of initiatives through DIFC and all
Right.
to get the funds done. The economy is small, but a lot of efforts is being taken by the government. Even Saudi, the economy is relatively bigger, but the government wants to jumpstart it. They want to be the next Dubai in 2-3 years, which is quite aggressive, I would say. But then if you want to jumpstart something, then maybe I've been to Saudi, and There was an investor I met from, there was a founder I met from Kazakhstan, and I asked her, where do you live? They told, live here. Because she came here, they told her, okay, good. So they gave her the initial money, you stay here in Saudi and you build the product. So it's like that. When you jumpstart the project, then you may not get everything in house. You may have to
Right.
get the all the cogs from outside. I think with the recent things, developments that are happening, I think UAE, Saudi, they will also look at more made in their own country initiatives, because now rather than relying on some ally or something, they may want to do things on their own. So the mindset change will be there. I think this will also lead to a more development and increase in the number of companies that are there. Yeah.
Wonderful. Raman, we are mostly out of time now. Could you just finish up by giving us some advice, both for investors as well as startup founders, some final bit of advice?
Okay, I'll give one advice for each. One advice to investors is I would say that I know it's difficult, but just have to be little more patient. I've seen, like, there was a company in which we invested, and the investor on within a month, he had made his money 3x. But he was saying those, I don't have the share certificates, I don't have that. I know. See, actually, what has happened, and I don't blame the investors for that. It's like, this is the age of instant gratification.
Right.
You want anything, you're not willing to wait for 2 days for Amazon. You want to order now on Swiggy, Instamart, Zomato. Just now, it has to come now. The guy has to come on my at my door. So I know it becomes difficult. Some of these things are painstakingly slow. The wheel churns slowly, but over a period of 3 years that we have developed around 4 exits, around 16x money people have made on these exits. So it is highly rewarding, but it's little slow. So I was a guy, who want to say, no, I want to exit, I want to sell the investment. I told, okay, we'll give you some returns and then you exit out of it. But I told him that why you want to do that, because you already made 4x money on that. So it's like,
Right.
you cannot be impatient every time. Like, you put the same money in stock market, maybe he will get this next day, he will get the shares in his demat account, but will he make that kind of returns? So this is what I would just
Right.
request, little bit patience. I would say this is also the right time to invest. When everybody, like, Warren Buffett also told, where there is fear, that time you invest, because when the markets are at all time high, then you're not going to make any margin. I think with this war again, market I've started falling. Startup valuations are at very good level. There are good opportunities for mergers. Even the listed companies or any other companies that are there, you can contact us. This is a great time to solidify your base and
Right.
add those feathers which can
Right.
help you in future. So this is a very good time. I would say the opportunity is there, and the right people, they will take advantage of this opportunity, because I think next after this, India is going to see a massive breakthrough. Stock markets are all time high, and there will be huge fund flow that will be coming in, and India will emerge as a bright spot in the overall global economy. So India, even UAE, I feel both will be a bright spot in the world economy. So it's just, for this short period that's there, I think take advantage of these. These are black swan events, and I think maybe nobody knows how much it's going to fall, but take advantage of it and diversify your I'm not saying to put all your investment in stock market, put all your investment in startups, but keep
Right.
a healthy
Right.
mix of that, because there are some asset class, maybe they'll be a little more risky, but they also then they can alter your life in terms of investments. To the startup founders also, maybe I would say that uh, I would say that take care of your investors. Your If you have existing investors, they are your early supporters. They have come where you don't have much to show, and I would say, see, I know what happens with many startups is that there are sometimes they go to a difficult phase. This is what I think. I am also a founder. Maybe they go to a very difficult phase. Maybe I think they don't know how to, because they promise things and some of the things did not happen. So I think they find it difficult to face and own up to that. But I would say that, keep transparency, keep communication on, keep the dialogue. You never know, some person may give you a lending hand. It's not just finance, it could be some other thing also,
Right.
like, relationship, supports, network. He can give you a next customer, he can even come and help you out. So
Exactly.
don't kind of
Right.
maybe, sometimes when the things get really tough, some of the founders, they just shut down. So I think that's not the way. Even if it is bad, at least communicate that, okay,
Communication.
okay, this is what we happened. Maybe last year we made loss. And these were the reasons, and we are trying to improve.
Right.
Happens. See, this is business. We are not expecting you to be to have to give miracles, but at least have that transparency,
Right.
integrity, trust, and transparency, and tell people that, okay, this is what happened. Okay, happened.
Right.
So yeah.
Wonderful, wonderful. That was very, very informative, very, very useful. I'm sure the viewers got a lot of valuable insights from all of that. Let's all comment on the podcast below and let's have a lively discussion on all of this. Best Vantage's information will be down in the description of the podcast below, as will Raman's info. So, other than that, thank you,
Thank you.
again for joining us, and that
Thanks.
was
It was
wonderful.
a great conversation. Thanks for having me. I love the every moment of it.